you bullish on Bitcoin? What are the fundamental reasons why you think? Now, you said that you think that we're going to hit what 12, 15,000 by the end of the year. Is that what you're saying?
10 to 11.
Oh, 10 to 11.
Yep.
And so why is that? Why do you think that Bitcoin is going to, and do you think that from there it's going to sort of rise in sort of a linear fashion from there?
A logarithmic, yeah. So there's two parts to it. So if you'd allow me just to walk through both. I don't expect you'll agree with either, but if I could put both together, because it's a coordinated outlook. So first you need the fertile ground. Before you get to any data, and this is our fundamental view, before you get to any indicators, you need the possibility of the potential for something to rise in price or to be in demand.
And
so
what do you think that, I'm sorry, I'm very sorry for interrupting, but what is the basis for that fertile ground? I mean, where is that money coming from? Who is going to get involved and why are they going to get involved? Without the people, without the money, how do you get to these new levels?
So the first piece, and this is a long-term view, is generational. There's a generational rotation away from traditional assets. And this has happened with preceding generations, right? The silent generation bought gold. Gold went up more than 600% in their lifetimes. Baby boomers bought equities. Indices have gone up several 100% in their lifetimes. Generation X liked hedge funds and products, right? We have seen the explosion there. So without talking about where this is headed yet, I think we can all agree that there are massive generational rotations in and out of favored financial instruments. Those massive rotations into an asset typically fuel exponential expansion in that asset class hundreds of times over. It was hard to see initially. Folks from the preceding generations debunked it, called it a bubble, and we can talk about some of those examples. But the reality is generational rotations into assets fueled their rise. I'd also suggest that when we talk about generational misunderstandings about new and emerging asset classes, for example, try to explain somebody from the silent generation what a VIX option is, right? And then compare it to their love of gold as an asset. Trust me, I've tried, they don't get it. So here's what we know about millennials. First, largest generation by population in history. That's a fact. Now, if we say the new rotation into a new asset class has a relational impact, then we can expect what millennials rotate into will have the largest impact ever on that asset class. Two, they distrust banks. According to Pew, there's some data, but it's Pew, that's not crypto related, 92% of millennials say on a survey that they distrust banks. These are folks that came of age during the housing meltdown, where bad behavior by banks cost their parents their jobs, it made them move schools, huge dislocation due to what has been ascribed to bad behavior by banks. Three, also according to Pew, trust in government's at an all-time low. The percentage of people saying they trust the government, some or most of the time, is now at 20%. During the Kennedy administration or Johnson administration, I think you were working on email at that point, it was at 80%. Fourth, they like Bitcoin and blockchain. We can debate to what level they do, but they do. Now, if we roll that together, and if we agree that new generations rotate into new and emerging assets that the preceding generations might not understand, even the greatest skeptics among us should agree that we have fertile ground for what is literally happening before our eyes, and that rotation into digital currency as a new asset class is part of that rotation. Once upon a time, we talk about emerging asset classes, entire countries were written off, and then emerging markets, literally EM, was defined as a new asset class. Just like emerging markets were not understood at the time, digital currency is a new asset class that really isn't very well understood by folks now. So when we talk about fertile ground, there's an emerging generation that is just now moving into prime income years, high distrust of banks, high distrust of government. There has to be a new asset class, just like the four preceding generations before them, that they rotate into, that the preceding generations fundamentally won't understand. They'll call it a bubble, and they'll sit on the sidelines while it exponentiates 4, 5, 6, 700% if history is any guide.
Okay, so one thing I need to clear up with people is that I am not a Bitcoin bear at all. As a matter of fact, I think that the technology itself and where we're going sometime in the future will make a lot of sense. And I agree with a lot of the research that you're quoting. What I'm more interested though is in how that will manifest, and they can't do it on their own. The millennials aren't going to spontaneously create this new economy. It's just not going to happen. I mean, there's huge money out there that exists, and it's not going to go away. They're doing things in a certain way. Either they have to move aside or be pushed aside, and these new systems and these new economies push them aside, or they I guess incorporate them or cooperate with them.
That's right.
How do you see that? I mean, how do you see that evolving?
So I can tell you exactly how it happens, and I can put it in quantitative terms. So we model, folks who've been on the stream before, we talk about this. It's a very simple principle. It's called Metcalfe's Law, METCALFE, Metcalfe's Law. You can Google it. You can Google it while we're talking. It's a very simple but time-tested and honored mathematical principle. The Metcalfe's Law has been used very successfully to predict revenue for network-based digital businesses. Search Facebook and Metcalfe's Law, right? You'll see the charts and click on images and you'll see how it correlates. All Metcalfe's Law states, and by the way, Metcalfe was simply one of the early inventors of Ethernet and just trying to forecast how quickly something like Ethernet spread. And honestly, and I say this respectfully, folks at the time of Ethernet were saying it can't just be the kids. It can't just be this new generation. How fast can something like the internet spread? Because we all know the internet is only valuable with other nodes on the network. So Metcalfe went to work and he said, how can we look at how this thing spreads? The equation for Metcalfe is simple. It's the number of users times the number of users squared. It states that the bigger the network of users, the greater that network's value becomes. Very simple. Metcalfe was a distinguished electrical engineer, I believe. Again, he was speaking specifically about Ethernet. But we've seen over the last 9 years, this applies to cryptos. Now, I got into Metcalfe, honestly, initially looking at Facebook. When you looked at Facebook, its IPO, biggest tech IPO ever at $38, folks said, no way. It dropped to 18. Folks don't remember. IPO'd at 38, dropped to 18. Folks said, how can we possibly value or evaluate, basically at the time it was derided as a website. It was simple, Metcalfe. When you square the number of users times the number of users, you got an exponential logarithmic curve up that is predicted almost to an exact point where we are today with Facebook revenue. Bitcoin is digital and network-based, just like Ethernet, just like Facebook. So what Metcalfe teaches us is the spread of value in a network is nonlinear. It's by definition illogical. If you try and follow linear logic, it can't just be the kids, it can't just be the kids. You miss it. We know by modeling past digital network-based structures, it is by definition nonlinear. One node on the network does not equal one node on the network. It equals a network of other people that node is bringing in. Real quick, if you've run Metcalfe late last year, you would have seen that we are extended, and Bitcoin corrected earlier this year as a result. What's remarkable, and you can Google this, Zero Hedge did a great article about it last November. Just Google Zero Hedge, Bitcoin, Metcalfe. For the last 9 years, I think I was modeling digital advertising for University of Phoenix or something, and you may have been with the Apple blog. But for the last 9 years, Bitcoin has tracked Metcalfe. It is a logarithmic curve that is very disciplined in nature, number of users times number of users squared. It's not linear. The additions aren't worth one. So as I said, chart it for the last 9 years, you'll see two major standard deviations. And you saw this at the time. 2013, 2014, those of us who were around then, huge run up, got overextended. We got way above Metcalfe. You can see this on the Zero Hedge chart, and it snapped back. The other time, late last year, last November, December, we got way beyond Metcalfe. It snapped back earlier this year. We are now tracking perfectly to Metcalfe and perfectly to our forecast at the end of the year of about $11,000.
Okay. There are things that it doesn't take into account, though. I mean, you look at social networks like today, or yesterday, you saw Facebook. Their forecast was off, and they dropped $120 billion. Today, Twitter took a big hit because the rate of adoption, new accounts, are way down. I mean, these are things that happen. They happen. Things
right.
can collapse on themselves. The advent, or what happened with Bitcoin and crypto over the past year and a half is an anomaly compared to what happened the previous 8 years. And introduced in there were all these scams and frauds and other things, and they still exist, and they need to go away, in my opinion, before there can be any more further movement. So I'm not so sure that Metcalfe's law is going to just keep on tracking like that. There's too many other variables that happen that take into the human aspect that can put a little monkey in the wrench of that expansion.
Yeah, that's fair, and that's why we trade, right? Because if everybody was right and everybody knew the deal, there'd be no way to make money. Every asset would be priced perfectly.
Right,
But
right,
for
and that's
us,
fundamentally why I'm saying that, why I'm predicting that we're not going to be going up in this sort of logarithmic. That there's going to be a kink in this elbow here. In my view, we need to get rid of, and we need to flush out the bad blood that's out there right now. There's just a lot of crap out there, plain and simple.
and the current financial structure, Bank of America, Goldman, doesn't have financial misdeeds. I mean, I understand that argument, and we've been in a hyper-intensive news cycle about crypto, and it is easy for folks who are anti-crypto because they're a part of the established order to say, well, there's financial malfeasance. Drug smugglers use it to launder money. Drug
Well, that's not
smugglers
what
use. I didn't say you said that. I just said, you hear it in the echo chamber to your point. My point is financial malfeasance follows money. And when you see money being made, those folks follow. You call it a bearish indicator. Those guys follow money. I mean, the story of the last 2,000 years, where you see those trends moving is where money is being printed. And big money finds a way, again, another just axiom, number 3 of the things I want to drop off tonight. Big money finds a way to make more big money. It is the story of history. And to say that somehow shuts down, stops, or slows down, it's exponentiating before our eyes. We were at 19,000. I understand we crashed, but we crashed at 5,850. And this is where I said earlier, traders underestimate the amount of money that they can make in a year while they overestimate what they can make in a day.
Sure.
Or 3 months, or 3 months versus 3 years, right? If you wash your hands of BTC at 10 on its way down to 5,850, yeah, I get it. But if you bought in at 2015 and understood, the nature of network-based, digital-based transfers of values through networks, you're doing pretty well. Just like you're doing well with Facebook, just like you're doing well with Google.
I think we're going to agree on the ultimate place where this is all going. So in fact, in the beginning of this year, I predicted that we may hit $30,000. But after I saw what happened and transpired over this past year, and that monkey wrench that was thrown into the cog here, I took that off the table, because I don't believe that that there is room or time to be able to educate enough people to bring in new money into this market to be able to continue on that growth rate. At least not now. That's why I'm saying that it's going to take a little time. I think there's going to be a kink in this system for the next year and a half at least. And I don't think that we're going to start seeing that exponential growth until late next year.
Yeah, our view is it's a nice roll. It's a nice leisurely stroll to, again, between 10 or 11. We're within $200 of our forecast right now.
Okay.
Folks have been on the stream. I was there 58.50. I was live 58.50, taking some heat, and rightfully so. And I remember it's June 29th, an illustrious, infamous day, also known as my birthday, streaming. We had 58.50. And we have been consistently at the slow roll off of that level of support. We also look at things like volume, volatility.
Well, let me ask you something about this slow roll and money coming in. Would you agree that there's no new money coming in? In fact, what we're seeing really is and look, I know that all markets are manipulated, but this one goes beyond the pale. All the moves up, every single move up over the past 4 months, have been manufactured by whales and other interested parties. They push the market up, and then the rest of the plebes then kind of chew off the chum, and then then it slowly degrades. Then they push it up again. A perfect example is what happened just yesterday with the SEC. That announcement dropped Bitcoin significantly. And then we had another very prototypical injection of capital by somebody. It certainly wasn't, this sort of mass psychosis where all of a sudden within a 5-minute period, everyone decided to hit the buy button. This is a coordinated move to push that back up into an area where they know there's some liquidity.
Yeah,
so
I mean, in
how
my
often
opinion,
can they
though,
do this? How often can they do this
as
before
often
they
as
start? Well,
as often as the Fed does, as often as ExxonMobil does with their own buybacks to prop up their own price. It's a story of financial engineering. It's just kind of what happens today.
yeah, but
I agree in a sense, but
let me finish the question though. I mean, is there a limit to this? Where is that limit? And before they're going to start needing new money to come in order to get new money to come in, there has to be people that are educated on, what the system is and how it will benefit them and all this other stuff. I mean, it started last year because of this sort of this hyperbolic move that happened, and greed and avarice took over, and people just started throwing money in it. And that's when all the scams developed and so forth. That may happen again. Or we're going to see some kind of more organic growth. But in order to get that new money, people have to be educated. They have to get over the stigma that this past year caused. How are you going to get that new money in to achieve that longer sustained growth?